Hi and welcome to Phoenix Crypto. My name's Andy. I'm just going to talk a little bit today about how I get my entries. It's a question I get on a regular basis. In fact, it's probably one of 5 questions I get on a regular basis. How do I find these trades? How do I get the perfect entry? What is my strategy? All of those types of questions. And I wanted to spend a few minutes talking about how I get my entries. And I think, and one of the points that gets raised is, do I look at what time frames do I look at? Am I looking at a 3 minute or 5 minute or 10 minute or 15 minute time frame in order to find just that perfect entry? And my answer back is no, I don't. And I actually don't think there is such a thing as a perfect entry. The perfect entry looks the perfect entry after the trade is completed. When you've got a trade that's in the green, 100%, 200%, 300% or more, every entry looks really good at that point. Every entry. And the last week I've had some pretty great trades. Even for my own standards, and some of those were. Yes, there was some analysis, but not nearly as much as I think people might feel. And I'll just talk this through literally just this week because it's still fairly fresh in my memory. So, if I go back, I entered. I think this is the 30 minutes. So I entered around 61. Sorry, I'm just thinking about where I entered. I entered about just over here somewhere. And I was umming and ahhing. I actually entered and got out and then re-entered again, which, if I'm honest, is a terrible thing to do for 2 reasons. The first is that you should trust your own TA. If you've spent the time and you have done the analysis and you are absolutely sure, you should trust your TA. If you don't trust it and you exit and you think, actually, there's something not quite right here, I'm not sure, you shouldn't re-enter. And the reality was I was sure about my TA. I was sure about what I'd done. I was sure that there was. I'm actually looking at the wrong part of the chart. It was over here that I entered. It was this line here. I thought something was wrong. You need to be sure, and the reality was I started to doubt myself, and I think when I did a video actually reviewing this trade a few days ago, I said I entered around, I think it was about 61,600. I got out because the price was ranging, it was going up, going down. I was positive we were going up to the upside, positive, but I just couldn't. I had a little bit of self-doubt there, which is normal, and particularly when you're seeing things like a red diamond, you think, oh gosh, how is this going to play out? But I was confident. And the other thing that gave me confidence was the respect that was shown on this trend line. Look, everything here, testing, dropped down, came back up, tested again, all of that giving a lot of confidence. So, I didn't agonize. I wasn't really looking at what was happening on the 15-minute because, on the lower time frames, the price oscillates. Goes up, goes down, goes up, goes down. But really, what I was looking for was the trend. If the trend is going up and going up, significantly, then what am I saving here? Is the difference between maybe here was 61 almost 2 to here, 61.7. You're talking difference of $500. Now, when you're making a move that is, I think this was like a 6% move or something. That's pretty significant, particularly for Bitcoin. So $500 is nothing. It doesn't really matter. And by the time we're I'm exiting over here, that $500 didn't really make a lot of difference. I mean, it's quite different. If we were scalping, from one trend line to another, that's quite significant, and your entry is much more important. But for doing a long swing, which is what I typically do, high leverage, low, very small position, 1%, proper risk management, stop loss, everything, these trades can be open for a day, day and a half, 2 days, maybe even longer for some. And therefore, you can't really agonize over your entry, because it's going to be open for quite a substantial period of time, and in that time, the price is going to oscillate, and I think I was in a trade yesterday. If I bring up Mana, which is having a bit of a great time at the moment, I think I was in a trade somewhere like over here or something like this yesterday, and I got in, I don't know, maybe it was around here, it was about there actually, and the price went down 50%, and I thought, oh shit, that's pretty rubbish. Looked again, I don't know, half an hour later, I was up 150%. I was thinking, this is pretty good. Next minute I look, I was down 150%. Now obviously, it's because the price is ranging, and because I'm using high leverage, the price, the movement is exaggerated. So, these swings are more extreme. They feel more extreme, but actually the movement is quite small. I woke up this morning, and where would that be? Somewhere over here. And I think I had a six. I think it was 580% move. So quite substantial. Whether I did I get that perfect entry? No, but that's not what I was looking at. I was not looking at what was happening on a 30-minute. I was looking at what is happening on a 4 hour or a daily. That's what I was looking at. And that's really the difference. And that's the reason why, people ask me, what time frames do I look at? They're up here. I look at the 4 hour, the 6 hour, the 8 hour, the 12 hour. I'm looking at the daily, the 2 daily, 3 daily, 4 daily. I actually, feel like I'm missing two, one around the 10 hour and one around the 18 hour mark, and probably a 5 day as well. I'm looking at Bitcoin at the moment, and I'm looking for a potential big move that the Bitcoin's going to make in the coming weeks, I guess. And I think on a video I've talked a little bit more around looking at this, looking for a little trigger wave here, which is starting to form now. So that's what I wanted. It's starting to play out, for regular viewers. But I'm looking at a 12 hour here, and when I enter, I'm not going to really look at what's happening on a 5 minute, because it won't really matter that much. You've got to really be looking at the time frame for your entries that is relevant to the type of trading you're doing. If you're scalping the daylight out of in between these support and resistance zones, your entries are really important. You want to be entering when it gets to here, and gambling on price rejecting. You want to be entering here and gambling on price. You don't want to wait for it to already have reversed. You want to be getting in here. There is a risk that it keeps going down. There is a risk, but you have to trust your analysis. You look at the different time frames. Do you think in the upper time frames there's a lot of downward movement? If no, you can set a stop loss. You can set a stop loss over here. Bit of a middle ground. gives you a little bit of leeway for a bit of for the action to dip underneath. You put the stop loss too tight, you're quite likely to get stopped out too prematurely, and that's an issue. So of course your entry does matter, but it matters more depending on the type of trade that you're doing. If you're scalping 1 minute, 3 minute, 5 minute, yes, you absolutely need to get the entry spot on. One of the benefits of the swings is it's less pressure. The fact that I'm using high leverage is immaterial. It's still a swing trade, and therefore if it's going to be open for that period of time, really I just concern myself with these higher time frames, and I don't really get concerned myself too much with the lower time frames. The fact that it then catches a pump relatively quickly means the swing trade isn't open for that long. It might only be open for 12 hours sometimes. If I look at Bitcoin at the moment and what I'm trying to eye up, what it's doing on a 4-day is bothering me. I can see a red dot here. I can see the VWAP's gone down. I'm looking at the 2-day. The VWAP's underneath, red dot. Money flow is extremely high here. Has been higher, of course, but is very high here. Very typical kind of looking for a downward movement. We can see a trend. So that just gives me the confidence that over that time frame, and that's the reason why the higher time frames are so important. They do play out. There is so much more information that these indicators they process. They have access to. The things typically are fairly reliable at these higher time frames, and that's the reason why I prefer doing a swing trade. Don't get me wrong. I also scalp, but I often scalp in breakouts or pumps that then turn into being a big swing trades, right? So if I go back to Bitcoin, when I got I can't remember which breakout it was now, but when I got this breakout here, I think this was a nice. This is the wrong time frame, but when I got, I think it was this breakout here. That was done as a breakout. Maybe a short pump. $1,000, $1,500, $2,000. In the end, I think we got like a $6,000 move, which is incredible. But that's not what I was expecting. It was difficult to know how much it would break out by, but that's the reason why I wasn't really concerned about my entry. So I think the first thing is you got to know what kind of trader you are, what type of trades do you do, what are you comfortable with, and what kind of trader you are really depends on what you're comfortable doing. Some people cannot keep a trade open overnight. They just cannot do it. The worry, even with stop losses, they don't know what's going to happen. Market might be a bit volatile, just very uncomfortable. These are the people who prefer to scalp. They like to get in, they like to get out. Other people, they don't like they don't want to spend time looking at charts. They want to enter a trade, they want to leave it for a few days, and they want to come back and see it hopefully in the green. It's all down to your particular style, what interests you, what you're good at. Dare I say, that's incredibly important. So, what kind of trader you are, is the first point. And then you start building your strategy around that, and it evolves from that. This works for me now. I haven't always been successful. I've made plenty of mistakes, lost quite a bit of money along the way. But this strategy has evolved out of what works for me. What am I comfortable with? What do I think I'm actually good at trading? And that's incredibly important. You've got to be good at trading, otherwise we're in the wrong game. And it's not worth doing if all we're doing is losing money. So these are things to give some consideration around, and they're all relevant to how do you find the right entry. And like I say, I personally, for my type of trades, don't place as much of an importance as people think I might. I'm more bothered about where is the trend going. If the trend is right, then where I entered won't really matter too much in the grand scheme of things. It'll be a 5 or 10% difference, you know, in a trade, which is nothing, you know. So it really depends on the type of trading you're doing. If I was doing these kind of scalps, would be much more significant. Right, I think that's probably it for today. I hope you found that useful. If you did, like the video, subscribe to the channel. Really appreciate it. If anyone is listening is not a member of my Discord, there's a Discord link below. Feel free to drop by and take a look and say hello. So thank you very much.